Hello again from Core Wealth. As you can see, it's Friday afternoon and we're supporting the Springboks. Looking forward to some good rugby over the coming weeks at the Rugby World Cup, and hopefully they bring the cup home with them. As you've heard us speak in the past, we've often mentioned the fact that investors and you as our clients are faced with a lot of noise from the media, both social and the mainstream media. And often that noise is quite negative because bad news sells, unfortunately. In this week's written version of the monthly wrap-up, we've got some excerpts from an article written by a well-respected economist, J.P. Landman, where he unpacked some of the things that have already been put in place by Cyril Ramaphosa and his government to prepare South Africa and help take us out of the mess that we've been put in over the last number of years. Really well worth the read, just looking at the facts of things that have been done that will help into the future. If we have a look at markets for the month of August, it was a mixed bag. The best place to have been was offshore equity, where we saw developed market equities performing strongly. Emerging market equities were the next best place to have been. In South Africa, the listed markets were off in August, so we saw listed equities and listed property both down for the month of August. If we have a look at the year to date, how have things gone up to the end of August since the beginning of January? Developed markets up quite strongly over that period, and some of that has come through from the rand weakening, particularly against the dollar. Emerging market equities also up nearly 10% over the first 8 months of this year. Another area where we continue to see value but has also performed well so far this year has been the South African bond market, where you've had returns of almost 8% for the year to date. All of these just illustrating that you benefit from having a diversified portfolio, not having all your eggs in one basket. And we've seen the benefit in some months where the local equity market has performed really well, while perhaps the offshore market hasn't done as well, and bonds, for example, in the recent past, having performed quite nicely and adding to returns of investors in diversified portfolios. I just want to talk about some of the macro news that came out since our last video. The two main ones are the GDP growth numbers for the second quarter that came out recently, as well as commentary that was given by Moody's, one of the three rating agencies. GDP growth came out at 3.1% for the second quarter of this year. The first quarter was negative 3.1%, and so we're sitting at the moment at basically even Stevens for the year to date. The important thing about the 3.1 was, one, it was quite healthily ahead of what people were expecting. Most economists were only expecting 2.5% growth. And secondly, if we have a look at GDP growth for the first 6 months of 2019 compared to 2018, we're flat in 2019. In 2018, at this point in time, GDP growth was about 3% down. So we've seen a bit of improvement in the sense that 2019 is actually looking better at this point than 2018 did. On the rating agency side, it's something that most people are aware of, and it makes a lot of headlines that are we going to be completely downgraded to junk status? Moody's came out and explained some of their thinking around our current rating. I guess the short answers are that they don't expect to downgrade us this year. They are concerned about economic growth, also about the debt levels in the state-owned enterprises and what government is carrying because of that. But in the short term, it doesn't look like we'll get downgraded this year. They'll keep an eye on what's happening at the state-owned enterprises, particularly the restructuring of Eskom, as well as what comes out in the medium-term budget. They did make the point that they like what they see in terms of what government is proposing, and they want to see more and more of that implemented, which is something that we know, but a good sign that things are moving in the right direction. We are seeing a lot of attractively valued shares, particularly in South Africa at the moment. We did a little exercise to try and illustrate how attractive some of these shares are looking. We took 5 well-known companies in South Africa They are Investec, AECI, SAPI, Aspen, the pharmaceutical business, and Sohosan, the gaming company. We looked at their current valuations and we compared that just to what the average has been over the last 15 years. Now remember, the last 15 years includes the global financial crisis where stock markets lost a lot of value. And we've said if those shares, just based on their current valuations, were to move back to the long-term average, so we're not suggesting any massive profit growth or anything, we're just saying how people value the businesses, were to go back to the long-term average, that portfolio would give you a return of 19.6% per year for the next 10 years. If we add dividends into that, it gets closer to 25%. To illustrate how big that is and how attractive that is, if we took a portfolio and put half of it into those 5 shares and put the other half into something that went to zero, that lost all of its value over the next 10 years, the total portfolio would still give you a return of over 11%. That's about 5%, possibly even 6% ahead of inflation, which is a substantial return. We did this exercise just to illustrate how important it is to look through the noise and look at actual valuations on businesses and look at them in a realistic fashion. And it just helps us not to ignore some of the opportunities that exist, whether they be in South Africa, whether they be anywhere in the world, and any investment type. It's important to look through the noise and make sure you've included some of those assets in your portfolio for the long term, because when they turn, they'll add substantially to your portfolio. I hope that was helpful in terms of giving you some insight into what we're doing, but also helpful in helping you manage some of the emotions that often you'd be challenged with as you're bombarded with the noise that often comes through from media. If you've got questions, please do give us a call, drop us an email. We'd love to engage around anything that you may be thinking about in terms of your investments. One of the things that we do just want to conclude with is we've all been part of the challenge that we've faced as a country around violence against women and children. A small thing that we've put out there on social media, if any of our clients or even friends of yours are in the Durbanville area and they are feeling unsafe, that please just do come through to our offices and we'd love to just give you a space where you can feel safe. So hope that helps, and look forward to seeing you again in the near future. Bye-bye.